Are you wondering why Indian markets are buzzing about the latest announcement from JPMorgan Chase? Well, it could mean a game-changing shift for India's financial landscape, and you will want to know how. Hello, I am Saloni Goyal from ET Markets, and in this video, we will decode what India's inclusion in JPMorgan's bond index means for its markets, banks, and the currency. Before we move on, for those who are watching this on YouTube, please like and share our videos and subscribe to the Economic Times channel. After keeping India on watch list for nearly 2 years, JPMorgan Chase and Company announced last week that India's bond will be included in its emerging market indices. India will be allocated a maximum of 10% weight in the JPM index, with the inclusion starting in a phased manner from June 2024. Before diving into what this inclusion could mean for India's markets, currency, and economy, let's take a moment to understand what bonds actually are. Government bonds are often considered amongst the safest investment, offering almost zero default risk. That's why they're sometimes referred to as risk-free securities. Think of bonds as fixed income instruments similar to your bank FDs. Just like you earn a fixed interest on your bank FDs, bonds also offer a fixed return known as coupon rate. So what's the impact of this move? First is massive inflows. The inclusion could lead to estimated inflows of nearly $30 billion over the next 10 months. To show how significant this is, well, foreign institutional investors have invested only $3.5 billion in the Indian debt market in 2023 so far. Number two, it means a boost for the PSU banks. So far, banks have been the largest buyers of government debt as they are mandated to invest in bonds. An additional source of funds will help bring down bond yields, and banks will benefit from this. Following the announcement of India's bond inclusion, PSU bank shares surged last Friday even as the overall markets fell. Number three, rupee stability. Starting next financial year, increased inflows could provide a much-needed boost to the rupee, offering a cushion against the multi-year rise in US bond yields and volatile crude oil prices. Number four, opening doors for more inclusions. Some top US funds are pushing for India's inclusion in the Bloomberg Barclays Emerging Markets Bond Index, which could result in an additional $24 billion in inflows. Thanks for watching.